But joining us for the hour today, Jenny Harrington, Steve Weiss, Kevin O'Leary, John Najarian, the co-founder of MarketRebellion.com. Show you the markets, 12 noon in the East. We went positive, albeit slightly, briefly. And the Dow's now negative by a little more than 300 points. S&P's down by 1%. NASDAQ, so much focus there, 1.25% to the downside. There is the Russell 2000. You did put in new 2022 intraday lows for the NAS, the 100, and the Russell today. And close eye on yields, too. As always, 308 is the yield on the 10-year. So, Weiss, really trying to help people understand, like, where we are and where we might go from here. And if there are any signs that you see that we could stage a turnaround, right? Yesterday, you know, some said that's capitulation. That's what we were looking for. You had more than 90% down volume, a sign that people were looking for. Sentiment is as negative as sentiment could be. Cooperman today talking about selling, pops in the market, selling strength. He said price action's bad. How do you see it?
Yeah, I don't see a turnaround. I think we're overdue for a short-term rally, but I'm not going to participate in it. If there are any bell that rang as Powell's comments were that bell, it said, okay, trade it, and trade it very short term, as I noted on Wednesday. It lasts for a few hours, as I thought it would, but then it's back to more of the same. Look, the facts are, while sentiment has turned decidedly bearish, it's newly bearish, and it's still couched in saying, well, look, if you take this kind of view, the facts are that we've seen the first 50 basis points tightening. But the bet, if you're investing in the market, is inflation to come down before the economy really rolls over. And I personally think that's a bad bet to make at this point. So I think inflation is going to stay stubbornly high for reasons that didn't exist in prior inflation cycles, which are the war in Ukraine, which are the supply chain issues that are stubbornly existing still. And sure, you can point to certain data points and say, okay, so inflation's peaked here, as Brad Gerstner did, but overall inflation is still high. So while wages, today was an amazing report, wages going up over 5%, but you've got inflation at 8.5%. So you've got that imbalance, and you still have sticker shock. So I think that the market is still to be sold on pops, and until everybody's bearish, until everybody hates the market, and until we see the economy start to roll over, I'm just not a buyer.
Okay. Kevin O'Leary, Kramer says market's getting oversold. He's been looking for selective, and I use that word selective for a reason, opportunities. He's not sitting there buying hand over fist, obviously. But you're buying a lot of stocks, which jump out to me as a statement of where you stand. I'm talking about Chevron and DuPont and Cigna and Moderna and United Health. And you bought more Home Depot and Apple and J&J and P&G and Pfizer and Baba and Tencent. Looking to add Facebook to Facebook maybe today. Why now?
All of those companies, Judge, that you just listed do not require financing. They have very strong cash flows. They have very strong balance sheets. They distribute profits to shareholders. The only difference between 6 months ago, 4 months ago, 3 months ago, 2 weeks ago, and today is their PEs have been crushed because of the change in the sentiment in the market. And I understand that, but at the same time, I have a choice to make as an investor. I can go to cash. My cash desk could pay me 44 basis points in an 8% inflationary environment. That means I'm basically losing 7.5+%. Gone, vaporized, history. No value there. Not going to do that. Do I want to buy the 10-year bond at 3%? No. Horrible value. Until that has a 5 handle on it, it's not going to be my portfolio. Can I find stocks like the ones you just listed that actually have pricing power, that are must-have items for people, regardless of the price of the S&P, that are going to continue to sell those goods and services ongoing, even into an inflationary time, irrelevant to what happens with Russia and Ukraine? All those companies are going to perform in all of those metrics. The only question we have to decide is what price we're willing to pay for them. And starting in the last few days, I'm willing to pay the price. Now, I don't know if I'm catching the bottom, but I know these companies are not going out of business with anything to do with Powell or anything else in the economy or Ukraine or Russia or anything anywhere else in the world. These are mega cap, really high grade balance sheets with pricing power. I'm going to eat some more of them very shortly.
Yeah.